Good morning, everyone. This is Marshall Giller bringing you the morning comment for April 1st. Well, the dollar was largely lower despite more hawkish comments from Fed officials. Richmond Fed President Lacker said the Fed should raise rates in June specifically, while Kansas City Fed President George said the sooner we do it, the better. Although the Fed funds rate expectations moved up a bit with these comments, the generally weak economic data, a weak Chicago PMI, and disappointing labor market data in the Conference Board Consumer Confidence Survey pushed Treasury yields lower, and I think that weakened the dollar. Well, although it's hard to tell whether the move was driven by that data or by just the completion of the end quarter buying that propelled the dollar higher on Monday. Now, in the news, China's official manufacturing PMI for March just barely poked its nose above the 50 boom or bust line. The figure may indicate some measure of success from the government stimulus measures or perhaps just a rebound in activity after the Chinese New Year. More importantly, China announced that it would insure bank deposits. This is an important step towards eliminating controls on interest rates. Now, this will help eliminate distortions in the economy over the long run, but in the short run, it means more bankruptcies and economic turmoil. This transition period towards a more balanced economic model is likely to be negative for the Australian dollar, in my view. As for New Zealand, it has its own problems. EU quotas on milk production end today. EU member states are planning to increase production and boost exports to Asia. This will compete directly with New Zealand as milk and milk products accounted for 29% of its exports in 2014. Very disappointing Tankan. The Bank of Japan's Q1 short-term survey of economic conditions was much weaker than expected. The index for the large manufacturers, the bellwether of the Japanese economy, was unchanged from the fourth quarter and is expected to fall in the second quarter, while companies are now forecasting a cut in capital spending for the fiscal year. Japanese stocks fell on the news and dollar yen moved down with them. The poor figure for the export-oriented large manufacturers suggests that the Bank of Japan may have to increase stimulus or try to weaken the yen further. So I think it's yen negative. Today's highlights in Europe. Today we get the manufacturing PMI figures for March from several European countries, including the UK, and the final figure for the Eurozone as a whole. As usual, the final forecasts for the French, German, and Eurozone figures are the same as the initial estimates. The UK manufacturing PMI is estimated to increase slightly. In the US, the main event will be the ADP employment report for March, 2 days ahead of the non-farm payroll release as usual. The ADP report is expected to show that the private sector gained more jobs in March than it did in the previous month. This could add to dollar strength. The final market manufacturing PMI and the ISM manufacturing index, both for March, are to be released. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.